America's latest consumer price index inflation figures on Thursday, the 10th of October, and a monthly GDP growth update for August from the UK on Friday, the 11th, are likely to make a few headlines from a macroeconomic point of view in the coming week. The big corporate features will be the start of the third quarter reporting season in America, and that kicks off with Delta Airlines on the 10th, and then the mega banks JP Morgan Chase, Wells Fargo, and Bank of New York Mellon on the 11th. On this side of the pond, the only FTSE 100 member with a scheduled statement is Unite. The Real Estate Investment Trust, or REIT, which specialises in student accommodation, is due to release a third quarter update on Tuesday, the 8th of October, and the timing is interesting for three reasons. First, the FTSE Real Estate All-Share Real Estate Investment Trust sector is trading very close to a one-year high, even if, by the way, it still stands a good distance below its pre-pandemic peaks. Second, the sector started to see some merger and acquisition activity, as if to suggest some of the leading players think there may be some value to be had. Private equity giant Starwood is bidding for Balanced Commercial Property Trust, Segro is in the process of buying Tritax Eurobox, and New River REITs bidding for Capital and Regional. And finally, Unite itself raised £450 million in a pricing placed at 900p a share in the summer so it would acquire new assets, fund a new joint venture, and work on 4 new developments, all of which have planning approval. Now, it's worth remembering that the REIT sector is not homogenous. Some REITs are specialists in office space in London, others have a broader spread across the UK or have overseas exposure. There are also REITs that focus on retail, warehousing, logistics, care homes, student housing, or data centres, while some offer a mixed portfolio. Each of these subsectors has its own dynamic and needs to be researched accordingly. But it is possible to get a snapshot of how the market sees these different areas by looking at the discount to which a REIT share price trades relative to the last stated net asset or book value per share. It's also worth bearing in mind that REITs are very sensitive to interest rates, so the prospect of further cuts in the headline base rate from the Bank of England is one to consider, again for 3 reasons. First, rate cuts are designed to boost economic activity, which could benefit developers and landlords. Second, most REITs carry debt, so lower rates should mean lower interest bills over time and also higher earnings, at least once existing debt rolls over and is refinanced. And finally, if REITs pay out more than 90% of their earnings as dividends, they're exempt from corporation tax. The dividends provide a yield which can be compared to the returns available from cash and from bonds, and the lower interest rates go, the more attractive the yields from REITs could look on a relative basis relative to cash and bonds, albeit in the knowledge that equities carry more capital risk than cash or fixed income securities. Unite's not likely to talk about dividends at this stage of the year. Management will leave that to the full year results due next spring. But at the first half stage, the FTSE 100 member raised its interim dividend by 5%, and that's the growth rate that analysts expect for the whole of 2024, to take the total payment to 37.1p a share, equivalent to a yield of around 4% as I sit here. More important for this trading update will be any comments on the guidance already given by Chief Executive Officer Joe Lister. Unite has so far pointed to 98 to 99% occupancy for the year, with rental growth of more than 7% for the student year of 2024-2025, and therefore for Unite, adjusted earnings per share growth of 4 to 5% to around 46p per share for the year to December. Analysts and investors will also look for an update on how the £300 million raised in July last year at 905p and the £450 million raised this year is being deployed. Attention here will focus on new developments and approvals. Unite already runs over 150 properties across 23 cities in Wales, Scotland and England, as they ultimately feed into rental growth and therefore changes in the valuation of the total asset base. And that's across the wholly owned portfolio, the United Kingdom Student Accommodation or USAF Specialist Fund, and the LSAV joint venture with the Government of Singapore, which Unite manages. Thank you for watching. I hope that you and your families are all well and in good spirits, and I look forward to seeing you again next time.